All right, welcome back for the episode of Carnivore Trades. Today is Friday, June 3rd, 2022. If you like the content, you're not done so already, give the video a thumbs up, comment, subscribe, etc. And come find me on carnivoretrades.com for swing trading alerts and analysis here. So, what's going on today? It bears back in control here. So we had a gap down this morning and a little bit of selling, and now kind of going sideways here. You know, you can make a case that we're kind of bear flagging here intraday. It does look like we have a good hourly bear flag on the hourly time frame. VIX kind of holding steady here, but overall I'm not really convinced of anything right now other than this is possibly a weekly OPEX burn, and you can really see that in names like Tesla, Apple, Amazon. So look at what they did here yesterday. We'll just take a look at the daily. So we bid up really sharply. Looked like we are going to break out. Obviously, the spiders closed up above this. There we go, above these pivots here. And then today, we just gapped down. Okay, we had the jobs number, but you know how it works. The market's going to do what it wants to anyway, and it uses those numbers for cover. But we just gapped down and flushed on Tesla right to 700, and we have gone completely sideways since then. Apple gapped down, little retrace, and then a flush to 145. Gone completely sideways since then. You know, Amazon, take a look here. So gap down. Now this was due for a pullback anyway. I had several up days in a row, but you know, gap down, flush down, and then right down to 24.50, right in that area. So it looks to me like yesterday a bunch of, you know, retail traders probably saw this euphoric close, and this is probably where a lot of call buying took place on the typical usual suspects, you know, the Apples, the Teslas, those kinds of things. You can even see the semis here, Nvidia coming down and then getting pinned right here. So it looks like to me they're just burning out a lot of those FOMO call buyers. And notice how they're keeping Tesla above 700. Maybe they let it break here, but it looks like there might be a wall there at 700 that they want to keep it above that. But so it looks to me like this action can be explained as, you know, really just kind of theta burning. Overall, in the market, there is I would say after today, there's a pretty good lack of clarity. So we do have, you know, if you just, you know, look at the spiders here, you do have a nice bullish inside bar. There's nothing really to say this isn't. On the futures, you can even see it a little bit better here. You still have a bullish inside bar. Even with this little reversal candle today. I mean, we chopped around. I mean, look at the reversals we had at this 4140 area. This is where we couldn't break through. It took us about 6 days, 7 days to break through that. And so now we're chopping. We had some wide moves here inside of this consolidation period. So there's nothing to say that we can't consolidate here a little bit more and then push up into that, you know, the 420, 425 area I've been talking about on the spiders. Nothing to say that can't happen. But today's price action was a little suspect. I just don't like the clarity. We just exited some of we're really the last of our longs, and did a pretty good job here getting this move off the lows. And you know, I still think there's a good shot for us to get up into this area, but at this point the risk reward just doesn't seem favorable. I don't like the price action today, honestly. Even if it was just an OPEX pin, I don't like how the liquidity just seemed to disappear today, where it was there for really the last week or so, and now we are starting to flag a little bit bearish here into the final hour. The other thing I don't like is that XLE is doing all of the heavy lifting for the market today, and what I've been saying over the last week to 2 weeks is the NASDAQ is leading, guys. The NASDAQ's leading. Well, the NASDAQ is not leading today. It's actually leading the charge lower. So when I see that, so if we were selling off, but the NASDAQ was up less than everything, or down less than everything else, I probably wouldn't be as worried about it. The fact that the NASDAQ is sort of leading the charge lower here is a concern. So there's multiple concerns here. And, you know, this bullish inside bar can fail. You are in a downtrend, so it has a higher chance of failing. Now, with the positives here, there's a couple too. The Russell is actually leading. The Russell is down 1.1, and the spiders are down 1.7. And the NASDAQ is down well over 2% here, almost 3%. Basically erased all of yesterday's gains here on the triple Qs. So there is some positives also. The weekly, which, you know, when you have lack of clarity on your daily time frame, what you do is you go to your weekly, which is the more dominant time frame anyway, and everyone should be using it. But you can see here, you know, we had a nice surge last week, and you can make a case this is just a pause candle. So surge, pause, nothing wrong when that happens. An inside little pause candle. It looks like we're going to be able to hold that 100 period moving average as well. If you look at the weekly on some of these other things, triple Qs, nothing wrong there. You know, just a little retrace candle. Russell, same thing. Inside hammer, that's bullish. The Dow here, the diamond, again, holding at 100. Inside little doji candle. So there's not, you know, the weekly aren't, you know, weekly charts here aren't terrible. And look at these sectors here. Semis, again, you know, basically giving back all those gains from yesterday, but again, holding up okay on the weekly. IGV was helped out a lot by CRM this week, and actually has a green week currently. So some of these charts are looking okay on the weekly, and Dow Transports as well as another one. Nice inside hammer there. But overall, you get the sense that these sellers are getting very impatient, and this area will be met with selling. I have no doubt in my mind that that will happen. It's just a matter of, does the market make a higher low and go up and test this area next, and then, you know, have another bear phase, or, you know, does it roll over and we go down and test the lows? That really remains to be seen. And right now I'm kind of urging caution to everybody, and just, you know, only take the best setups and really kind of just let the market tell you what it wants to do. Because at this point, this is not the type of environment you want to be forcing trades in, essentially. But overall, we'll see if we get a little bit more clarity here over the weekend. Let's move on here. So we talked semis, transports, cloud rates here, a little bit higher here. Again, the jobs number helping that out. So the 10-year Treasury did get a little bit of a bid, still inside of this red bar though. So until it closes above that red bar high, I'd still say it's, you know, potentially could come back down here, fill this gap, and possibly trigger, you know, a potential head and shoulders. We're not going to necessarily entertain it yet because it hasn't triggered, but it is potentially there. 30-year, same thing, pulled back off the highs going into that red bar, and high yield debt pulled down with the market as well, but holding this green bar low for now. So nothing terrible. So again, potential for a higher low in here. You know, it'd be interesting if we filled this gap maybe next week and then started to move back up. So not, you know, anything terrible there on HYG at the moment. Interestingly enough, a weak industry group right now, home builders, actually had a, you know, pattern wise, this actually looks a little bit better on the XHB here than, you know, the spiders even on the daily. Same thing with the ITB, you know, nice upright flaggish pattern. So interestingly enough, home builders are holding up okay. Continue to watch that. VNQ, same thing. Again, upside here would be to 102 if we can make a leg up. Fins also not a terrible pullback pattern either. So up move. Now just kind of drifting lower here, but still inside of yesterday's candle. Weekly time frame, again, looks like everything else. Nice pop, and then a little pause candle there on the daily. So again, nothing really terrible on the weekly. There's XHB right there. But the daily is a little, and to me at this point, that just, there's lack of clarity, and there's the upside potential here. Risk reward is not favorable for me to really want to hold the rest of my longs here into this, and that's kind of the way we're looking at it. Made some nice gains off the lows. No real reason to get greedy here. You know, God forbid we get news or something over the weekend that pushes us lower. It does look like sellers, you know, if they push us down here in the final hour, I think they'll pin us. So I don't think we'll necessarily break through 410, but if they do, that would be a very negative look going into the weekend. Anyways, crude here, again, just like rates, helped out by that higher jobs number. It's going into this red bar here, so 125 is going to be very tough for it. We'll see what it does Monday, but it looks like it's holding up here into the close, and the weekly close. And if we look at the weekly time frame, again, that big red tail candle is now close to being tested. It has through that 120 handle right now, so we'll give it the benefit of the doubt. It's holding up well, and you know, it is going into heavy resistance, but the trend is up, so you got to respect it. XLE, not too much to say. Again, inside of that red reversal bar from the other day, but it's holding up well. It's extended. It needs to pull back. Same thing with XOP, OIH, but you got to respect them at the moment because the trend is up. Nat gas here, kind of a bit of a nothing burger here today. Had a little reversal yesterday, and it's trying to hold on to that 20 moving average. So we'll see if it breaks that. If it does, then maybe give it the upside or downside bias rather to about 750 and that 50 period moving average. Dollar index, again, kind of quiet here considering rates were higher. So still below yesterday's high. So still inside of this reversal bar, and just kind of getting a dead cat bounce now on the 50. And this is kind of the scenario that I've been kind of forecasting here is that we're looking for some kind of bearish consolidation here right around that 50 MA. And that should set you up for a move lower, but we'll continue to watch that. Bit of a quiet day, though, for the dollar. And gold also reversing pretty much all of yesterday's gains as well. But it's still, it's holding up okay. I would have preferred it. This has got a nice little, doji candle here. We'll see if it can continue sideways. You do have potential inside bar here, though, on the weekly. So bear that in mind. But, this is why I wanted it to flag a little bit longer. I didn't like how it pushed higher yesterday. I wanted it to flag a little bit longer because I didn't think it was quite ready to break out. And that's why we didn't chase it up there. But, nice reversal today. We'll see if it can maybe recover, find some footing and flag further. If it can, maybe it can move up to 1900. Silver also reversing, but not below yesterday's low. So again, if it can recover, I give it the upside bias to 23. Platinum coming a little bit off the highs from yesterday's surge, but it went into some resistance. Nice move off the lows. And palladium starting to roll over a little bit here. So it looks like that trend line has been good resistance. And copper also coming off the highs from yesterday. Still a really good surge. The one little problem is that we didn't get above that 20 period moving average on the weekly. We've reclaimed the 50, which is a good sign. But, getting above that 20 would certainly give it a much better look going into the weekend. Anyways, Bitcoin here, again, kind of quiet. And again, on the softer side, and it has been on the soft side. Now it's still holding this green bar low. So there is a potential for, possible green bar, consolidation inside bar and a move up. We'll see maybe if the weekend, the low liquidity, somebody can pump it up. I wouldn't rule that out at this point, but really we're just watching this green bar low. Any close below that would be a failure, and we're probably headed lower. Same thing on Ether here. So Ether has already lost that green bar, but every other coin other than Bitcoin is weaker right now. So we just kind of have to roll with the punches on that. As long as Bitcoin holds up, the other ones can hold up even if they underperform. But I'm really watching this here. So a daily close below 29,295.86. That's your level. You get a close below that, Bitcoin heads lower and probably tests this tail here. So bear that in mind. All right. Flipping back over here. So let's go back and check in on the spider. So it looks like we're holding up a little bit here. Yeah, so it looks like that hourly bear flag. So I'll show you that I was talking about earlier. So a little hourly bear flag starting to form. Looks like it tried to break down a little bit. It's about 330. Looks like they might save it into the close, but we'll watch that for a pattern Monday. I wouldn't rule out anything on Monday. They could, if this was just an OPEX pin, like I was saying, I wouldn't rule a gap up and a gap and go. Where, okay, the OPEX is out of the way. We don't care. We can let the market go higher. I also wouldn't rule out a continuation of this bear flag. So right now, I'm very neutral on the market, and really it's prove it mode for both bulls and bears. So whichever one proves it to me first or gives me a good enough pattern, that's the bias I'm going to go with. Until then, cash is king, and we'll just take it one day at a time. Anyways, guys, you take care. Have a great rest of your weekend, and I will talk to you all next week.